Hey guys, what's going on? JC here again with WEDGE Concepts, and in this video I'm just going to go over the different categories of stocks so that way you can make better investment decisions. Okay, so let's get to it. Alright, so in this video I'm going to be talking about the different categories of stocks, and I'm pretty confident that you guys know what stocks are, but just to give you a quick idea definition, a stock is going to be a piece of ownership in a company. So you pay a price, a stock price, and you own a piece of the company. Now what happens is, as this value grows, the stock price goes up, you earn money, or they pay out dividends, and that's paid quarterly or monthly, and that also puts money back in your pocket from your initial investment. Now some investments are going to be better than others, meaning that some stocks are going to be better than others. But I want to give you a good idea of what the different categories are. So as you start to build your portfolio, you'll kind of decide or have a better idea of how you want to construct it. All right. Now, the most common kind of stocks are going to be your blue chip stocks, which are my favorite. These are going to be your large corporations, the household names, the Amazon, the Microsoft, Ford, any Johnson & Johnson, things like that. These are going to be the large companies that they don't necessarily grow as far as locations or expansion, but they increase in revenue, so their value actually slowly increases. These are going to be the less risky of the stocks because they have a long history. And a lot of times you'll find these on the Dow 30. So any stock you choose from the Dow 30 is definitely going to be a blue chip stock. Next, you're going to have your speculative stocks. Now, these are the ones that, folks, they don't have a history. They're new to the scene. This is for the investors who are looking for the next Amazon, the next Google, where the stock prices are extremely low, but they feel as though that if they hold on to it over the next 5-10 years, it's just going to, blow up, and they'll be, multi-millionaires. Of course, these are going to be the most riskiest because they don't have any track record. They don't have any necessary products, but people are willing to invest in these companies with the hopes that one day they will blow up to something huge. Next, you're going to have your growth stocks. And I like these companies too because they typically don't pay the dividends, which is, again, a dividend is just when you have profit. Usually they share those profits in dividends to the shareholders, those who own stock. So a lot of times with these growth companies, because they're still growing and they want to grow, they will take, instead of paying out dividends, they'll go ahead and reinvest it into their company to help make it grow. So these are good when, again, this is how you can get that stock for $25 today, and then 2 years from now, that stock is worth over $80, $90, whatever the case may be, but you don't get the dividends. But this is a good way to grow your portfolio. And a lot of times you'll see these growth stocks in your 401ks. Next, you're going to have your value stocks. These are stocks that investors and all these analysts believe that are undervalued, meaning that the stock price is so low, but their intrinsic value, their true worth is much more than what the stock price. So even though everyone is not buying these shares or investing in this company, they believe that once people recognize or realize how valuable this company is, the stock will shoot up. They don't really have a track record yet. They may have had some growth and some decline, which is what caused people to sell their stock. It just shows that, this is basically a stock on sale. And this is good for when, your money is low and you want to get in with a company that you're familiar with. Now, the next one is your income stocks. And I want to say that, a lot of these stocks can fit into multiple categories, but your income stocks are going to be the ones that typically pay the dividends. They pay it either quarterly or they pay it monthly. A lot of times you're going to find these also in the blue chip category. They definitely pay out a portion of the profits to those who own the shares. It's a great source of income, especially those you can actually live off your dividends depending on how big your portfolio is. But this is a great source of income if you want to invest in your portfolio and have that set up that way. Now we're going to talk about penny stocks. Okay, I am not a fan of penny stocks. Penny stocks are going to be your most riskiest kind of stocks. Usually they're under $5. And so people will say, hey, this is great for day trading. If you want to play around with it, by all means. But usually these companies are just new to the scene. No one has ever heard of them. No one has any faith in any of these companies. I would avoid all costs at penny stocks. But if you have a stock that's $4 and you want to put $100 into it and maybe it goes up 10 cents and you sell, you can make a couple dollars if that's what you want to do. But then you're more so like a day trader. You're not really investing. But if that's something that you want to do, go ahead and check out penny stocks. But be warned that they are extremely risky. Now, the last category is going to be your cyclical stocks. Okay, these are the stocks that pretty much go alongside with the economy, right? So when the economy is good, these stocks go up. When the economy is bad, these stocks go down. So for people who pretty much watch the industry, take for example, this is not necessarily one of those stocks, but just to give you an idea, where if you invest in retail, the Targets, the Walmarts, that's going to be great. But if you invest in particular stores where you know the retail season is roughly between October and February, a lot of times people will make a move towards these stocks during those times and seasons. So you really have to watch the market, keep an eye on the economy, look at gold and oil and see, when is the best time to buy and sell those. And that's something that you can definitely add to your portfolio. Now, most stocks typically are going to fall in one of these categories. So by you having a general idea of what these categories are, it's going to make it a little bit easier if you decide to do it yourself and build your own portfolio. You may want to stick with blue chip and maybe some growth, or like the airlines, people like to travel during certain seasons. So during the cyclical, you might want to have a couple airlines when new cars are getting ready to come out. You invest in Honda or Ford. You want to be able to diversify if you want to really be hands-on with your portfolio. But in my opinion, and I'm not a financial advisor or planner, but I think if you go with the blue chip stocks, you can't go wrong, because I don't see Apple or Amazon or any of those major top 30 Dow 30 Jones, top 30 Dow Jones 30 Dow, whatever. I don't see those stocks or those companies going anywhere. Okay, so I hope you found this information useful. Definitely do me a favor, check out my other videos, and let's build together. All right, peace.